Welcome back to the Jerry Moras Team channel. I'm Jerry Moras with eXp Realty in Calgary. Real estate and mortgage fraud are rising in Alberta, threatening your home and security. Fraudsters are getting smarter, making scams harder to spot. Today, I'll show you the major types of real estate fraud and how to protect yourself. Your home is your castle. Let's keep it safe. The first and perhaps most common type of fraud we encounter is called fraud for housing. At its core, this is when a borrower, or someone acting on their behalf, knowingly misrepresents information to a lender in order to qualify for a mortgage they wouldn't otherwise be approved for. It might seem like a small fib or a harmless exaggeration to get a foot in the door of homeownership, but the legal and financial consequences are incredibly severe. This isn't just bending the rules, it's breaking the law. The primary motivation here isn't to steal from the bank, but rather to secure a home under false pretenses. Let's look at some concrete examples of how this plays out. A common tactic is income inflation. A prospective buyer might claim they earn a higher salary than they actually do, or they might invent a second job to boost their stated income on the application. Another frequent misrepresentation involves employment history. Someone might falsely claim to have been at their job for several years to show stability, when in reality they've only been there for a few months. They might even go as far as creating fake employment letters or pay stubs, using online templates to make them look legitimate to an unsuspecting lender. Another critical area of deception is the down payment. Lenders need to see that the down payment funds come from legitimate non-borrowed sources, like personal savings. In a fraud for housing scenario, a borrower might claim their down payment is from their own savings, when it's actually a personal loan from a friend, or a high-interest line of credit. This is a material misrepresentation because it fundamentally changes the borrower's debt-to-income ratio and overall financial risk profile, which is a key factor in the lender's decision-making process. They are essentially hiding debt to appear more financially stable. Finally, there's the concealment of existing liabilities. A borrower might conveniently forget to disclose a significant car loan, outstanding student debt, or large credit card balances. By omitting these debts, they artificially lower their total debt service ratio, making it appear as though they can comfortably afford the new mortgage payment. Each of these deceptions is designed to paint a rosier financial picture than reality, tricking the lender into approving a loan that the borrower may not be able to sustain in the long run, setting them up for potential foreclosure down the road. So, how can you spot the red flags associated with fraud for housing, especially if you're a seller or a real estate professional involved in the transaction? One major warning sign is when a buyer is unusually resistant to providing standard financial documentation, or when the documents they do provide look suspicious. This could include pay stubs with inconsistent formatting, T4 slips that don't quite add up, or employment letters that lack official letterhead or a verifiable contact person. If something feels off about the paperwork, it's crucial to pause and investigate further, rather than pushing the deal forward. Another red flag is a significant and sudden inflation of assets right before the mortgage application. If a buyer's bank statements show a large, unexplained deposit just before they apply for the loan, it could be an indication that they've taken on an undisclosed loan for their down payment. Lenders are trained to look for this and will often require a 90-day history of bank statements to verify the source of funds. As a participant in the transaction, being aware of last-minute changes to the financing structure or sudden, large cash infusions should raise your level of scrutiny and prompt further questions. The consequences for committing fraud for housing are severe and far-reaching. From the borrower's perspective, if the lender discovers the fraud, they can demand immediate and full repayment of the entire mortgage loan. If the borrower is unable to pay, the lender will foreclose on the property, leading to the loss of the home and any equity built up. Furthermore, this is a criminal offense. The borrower can face criminal charges, leading to hefty fines and even jail time. A fraud conviction will also destroy their credit rating for years, making it nearly impossible to get any form of credit in the future. For other parties involved, the fallout can be just as damaging. If a mortgage broker or real estate agent is found to have knowingly assisted in the fraud, they can lose their license, face civil lawsuits from the lender to recover losses, and also face criminal prosecution. Even if their involvement was unintentional, their professional reputation can be irreparably damaged. This is why it is so critical for everyone involved in a real estate transaction to uphold the highest ethical standards and to be vigilant in spotting and reporting any signs of fraudulent activity. The risk is simply not worth the reward. Now let's talk about the most important part, prevention. How do you protect yourself and ensure your transaction is completely above board? The number one rule is absolute honesty and transparency. When you are applying for a mortgage, disclose everything. Every source of income, every single debt, every financial obligation, no matter how small you think it is. Don't be tempted to fudge the numbers, even if you're worried you won't qualify. An experienced mortgage professional can often find legitimate and creative solutions for you, but they can only do that if they have the complete and accurate picture of your finances. Secondly, always insist on working with licensed and reputable professionals. This means choosing a licensed real estate agent, like myself and my team, and a licensed mortgage broker who has a proven track record and positive reviews. These professionals are bound by a strict code of ethics and have a legal duty to protect your interests. They understand the intricacies of the law and will guide you through the process correctly. Be wary of anyone who suggests you bend the truth on an application or who promises guaranteed approval without a thorough review of your financial situation. That is a massive red flag. Verification is your shield against fraud. If you are a seller, your agent should be working with the buyer's agent to ensure that the buyer's pre-approval is solid. For buyers, this means meticulously gathering and providing authentic documentation. Double-check all your paperwork before submitting it. Ensure your pay stubs, employment letters, and bank statements are clear, accurate, and up-to-date. If a lender comes back with questions or requests for more information, respond promptly and honestly. This cooperative and transparent approach builds trust and ensures a smooth, legitimate transaction for everyone. Finally, understand that the rules are there to protect you, not to hinder you. The lender's qualification criteria are designed to ensure you are not taking on a mortgage that is beyond your financial means. Getting a mortgage you can't truly afford is a recipe for disaster, leading to immense stress, financial ruin, and ultimately, foreclosure. By being truthful and working with the system, you are not only complying with the law, but you are also ensuring your own long-term financial stability and the sustainable enjoyment of your new home. A home you legitimately qualify for is a home you can keep. Fraud for profit is a complex scheme where industry insiders, like real estate agents, appraisers, and lawyers, collaborate to inflate property values and pocket the difference. They use straw buyers and fake appraisals, leaving lenders with bad loans and undermining the real estate market's integrity. One of the most common tactics used in fraud for profit is the use of inflated appraisals, as we just discussed. This is the cornerstone of many schemes. A red flag for this is an appraisal value that seems completely out of line with the prices of similar, neighboring properties. If a home is suddenly valued at $100,000 more than the identical house next door that just sold, you need to ask serious questions. Always be skeptical of appraisals that come in exactly at the purchase price on a contract, especially when that price seems unusually high for the area. Another tactic is the use of straw buyers. These are individuals with good credit who are recruited and paid a fee to have a property purchased in their name. Red flags that a straw buyer might be involved include a buyer who seems completely uninterested in the property itself, has little to no knowledge about the details of the home, or whose income and occupation seem mismatched with the value of the property they are purchasing. For instance, a part-time retail worker suddenly qualifying for a mortgage on a luxury downtown condo should raise immediate suspicion for any professional involved. Be on the lookout for transactions with no real estate agents involved, or where the deposits are being paid by a third party who is not the buyer. While private sales can be legitimate, the absence of licensed professionals can sometimes be a deliberate move to avoid scrutiny. Similarly, if the down payment or deposit funds are coming from the seller, the broker, or another unrelated party, it could be a sign that the buyer lacks legitimate funds and the deal is being artificially propped up to deceive a lender and extract equity. This is a huge warning sign that something is not right. Finally, watch for rapid back-to-back sales of the same property at escalating prices, a practice known as flipping for fraudulent purposes. For example, a property is bought for $300,000 and resold a week later for $450,000 with no renovations or improvements made. This is often a clear indicator of a scheme involving a fraudulent appraisal to justify the price jump to a new lender. Legitimate flipping involves adding real value to a property. Fraudulent flipping involves adding only a fraudulent appraisal report to extract cash from the transaction. Protecting yourself from fraud-for-profit schemes takes diligence and skepticism. Never let anyone use your name or credit to buy property. Insist on your own independent appraisal and read every document before signing. Trust your gut. If a deal seems too good to be true, walk away. Work only with trusted, licensed professionals. Welcome back. Today, we're exposing a terrifying reality: title fraud in Alberta. Criminals steal your identity, forge documents, and transfer your property's title without your knowledge. Suddenly, your home is no longer yours. They can take out huge mortgages or sell your home, leaving you with debt and heartbreak. It's a calculated, predatory crime, and it can happen to anyone. Title fraudsters start by stealing your identity, then forge documents to pose as you. They transfer your property to themselves, register it, and quickly take out a mortgage, cashing out before you even know. The first sign might be a foreclosure notice or tax letter. By then, the criminals are gone, and you're left fighting to reclaim your home. Title fraud is real, but you can protect yourself. In Alberta, title insurance is your best defense, covering you if fraudsters target your property. Guard your personal info, shred sensitive documents, and use strong passwords. Check your property title yearly and watch your mail. If you spot anything suspicious, act fast. Your home is your fortress. Keep it secure. In times of financial distress, homeowners facing foreclosure are especially vulnerable to scams known as fraud for foreclosure. Fraudsters pose as saviors, offering quick fixes, like stopping foreclosure or buying your home and renting it back. But their promises are traps, designed to steal your home's equity or the home itself, leaving you with nothing. In a crisis, beware of predators who turn your hardship into their payday. Watch for red flags in foreclosure rescue offers. No one can guarantee to stop foreclosure, and upfront fees are a major warning sign. Never pay for a promise or stop talking to your lender. Scammers may rush you to sign documents. Don't sign anything you don't fully understand. Always consult a trusted legal professional before making decisions about your home. If you're struggling with your mortgage, reach out to your lender first. They want to help, not foreclose. Consult a trusted lawyer or non-profit credit counselor for advice. Always verify any company offering help, and never pay large upfront fees or sign over your home's title. With the right support, you can protect your home and make informed decisions. Real estate fraud comes in many forms: misrepresented income, insider deals, title theft, and foreclosure scams. Knowledge is your shield. Always verify information, trust your instincts, and work with licensed professionals. Read every document, guard your personal info, and consider title insurance. Stay vigilant, share this video, and help protect your community.